Hello and welcome in the next broadcast. GBPUSD New York session, New York Open, the 7th January 2025. So yesterday we got a few sweet moves. And honestly, I didn't make a live this morning. I had to go to speak with my accountant and do some other stuff business wise. And then I had a coffee on a terrace in a bar near the sea here, and pushed a few buttons. Went nicely in positive. MetaTrader 5 apps on the phone. So, and what is the lesson out of that? And I'm especially in these live streams, I'm speaking to myself. The lesson here is my setup doesn't depend so much on price or market structure or whatever it seems to be. I noticed again that my setup depends most of all on the aspect called time. I didn't see everything on my phone. I just saw a few things happening. I saw on the clock and I started pushing buttons. And yeah, first had a loss of $880. Then put in some more positions and we went almost 2000 in the red, and then the position came nicely in positive and could close with 600 in positive. So, and that happened all in about 25-30 minutes. And it was, I had to go there, my coffee, I had other things to do, so I drank my coffee, couldn't leave the positions open because my strategy is mainly depending on execution and trade management while the position is open. And let's check out, or let's see what really happened. 11:30 is when I pushed the button, so that was around here in this move. No, it was, sorry, it was, let me see, let me quickly check the correct price and time in the app. And then I'll show it to the camera too, that's always interesting. Like history. Okay, this is clearly visible. I'll leave it there a bit. You can put it on pause and check it if somebody wants to check it. So the price of selling was, and it was 1211, but that is actually UTC plus 2. Let me check that to be sure. That was around 11:30. We made the first shoulder. This was the first upward move. It's a 1 minute chart. Let me put this on the 5 too, then it's gonna be all clear. So we had this move up, then we had this move, and then we had this move down. So I was selling around here, close the position somewhere here, and look what happened. Would have been a really nice drop of how many pips? 40 pips. So sweet to know, always interesting, and it's almost time for New York kill zone to open. Like I said yesterday, we won't be trading immediately, and let's put a line at 4, make that in another color, because we have a meeting here. Let me change the color to something like this. At 4 we have the ISM services PMI and jobs opening. Sometimes gives enough volatility to mess up the charts. So okay, let's write this down. New York USA 16 hours news high. It's all in the journal, like always, manual. Keep notes of what you feel, what you do, where you enter, what your stop loss is, why you're doing things, because you're training your subconscious on another level. Where I saw it, once I started journaling, my trading really changed quickly, because what actually happens is you're holding yourself accountable for what you're doing. And if you're writing down like weeks at a time, TP hit, TP hit, TP hit, but closed manual, it means that your TP calculation and profiling is correct. Closing manually has to do with these things here. Let me hold that up. So it's the fear of leaving money on the table, and also the fear of being wrong, it's all 4 fears that play with your mind, and it happens to me also. That's why most of the time people tend to close positions early. What I learned is, if you are relaxed and you're in a great state of mind, then it's better to work with a trailing stop loss, because where is the mic? The trailing stop loss is gonna give you the benefit of not being out of position. Like in this case, look, we entered what, here somewhere, position starts going well, and you start working with the trailing stop, like you say, like, look, I'm gonna put the position here in positive. So, and then you have the best position that is already paying you well, and then you see like, oh, price drops, you recalculate where the market is already been or has been effective and has no reason to come back to, like you move your stop losses all to here in profit. Price doesn't come immediately back, you have a retrace and you have a new break of structure here. So this becomes your new break of structure, and then we can conclude that this is a good new TP price. If you see that you have your positions here at 17 pips, and even from here a few more, you have 2-3 positions, then you're taking 30-40 pips out of the market. That's not even necessary. I'm telling everybody, with 5 to 10 pips a day you can make a nice living already and become a full-time trader. Having a few or one runner is always sweet and nice. That's why I prefer to enter multiple times in a position, and I'm not speaking on like the videos you see on TikTok, like 100 positions, tick 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 0 0 1. No, you enter with 1 lot, 10 lots, 20 lots. You just put different positions in different places, and what happens is you have different exits. Like you can take the first exit here, like take 17, what did we say, you take 17 or 10 pips out. You have with 10 lots you have $1,000 day, and $1,000 day you have 2 more positions in break even. Are you gonna be unhappy if they get hit in or around another 400, 600, or 2 times $1,000 more? A $3,000 or a $2,000 day? Do For the people that don't realize what $2,000 a day means, it's like a 400K year. You know, most people have to work 10, 15 years for that amount that is made possible for us to extract out of the market in a year. But yeah, it takes time to get there, and it's not always easy. Being full-time trader has benefits, but also let me state it like this. I was just having a conversation with one of my trading buddies, a guy from Holland, young guy, only 24 years old, trades full-time on Nasdaq, makes several 10,000s a month, and people don't realize the impact that being in a position has on the mind, but also on the body. If that makes sense, you know, if you go minus 2,000-3,000 in a position in 2-3 minutes, like yesterday, I had a stop loss of $6,000 calculated. Many people have to work 2-3 months for that amount of money. Here in Spain, even people have to work for that money 6-7 months with a minimum wage at 800. It's so unreal, the things we see daily, on a daily basis, in Forex and in futures, in indices. It's unbelievable even. And I know if you see videos of people trading and they're telling you, I made 4,000 a day, you're thinking like, no, they're not bragging. They're just proud of themselves, and they deserve to be proud. If you make that amount of money, if you can make, like I did this morning, a quick, like I said, a quick $600 while you're having coffee, you know, like I have days of 4,000-5,000 too. You know how proud you can feel on yourself. And it's not the money that makes you proud, it's not the win that makes you proud. It's the road you had to walk, the suffering that you surpassed, the stress that you took upon your shoulders, the things that you had to learn about yourself, about the market, about your setup, about so many there's so many variables in trading. And people think like, oh, they see some TikToks of Lambos and Rolexes and they think like, I'm gonna do this in 2 months. Forget about it. This is pure manipulation of the worst kind. And if you are not strong mentally, like really you have to be of a special kind of person or become a different type of person to be able to support the intense emotions and learn how to neutralize the aspects that most people can't even accept. Like, if I tell my mom what I'm doing, the only thing that she tells me is like, shouldn't you find another job, something normal, something with a fixed income? I'm like, Mom, I have a sales business, or I had a sales business. And she's like, yeah, but at least you were sure of your money. I'm like, no, Mom, I was never sure of my income. I was making nice money, but you also, in different types of businesses, you have ceilings. There's things like, I had a customer that I worked for since 2017-18. I worked for the same company in Belgium as an independent sales. As a company, I have my own company. But whatever I did, I was depending on what the clients are doing, on the economy. Because if the economy, like in with the big flu, you know, like C-19 that we can't talk about publicly, the whole economy in my country was dead or unalived. You know, there was no way of selling top numbers. You know, it was, so you're constantly fighting a ceiling. You only have so much hours in a day. You can only do so much visits at clients, so much phone calls. And you can try to sell another product or another service. And yeah, probably if you move up in the world and you find a better project, you'll make more money, but you're still gonna hit your head on a ceiling. And that, my friends, we don't have that in trading. Because the only difference between making 4,000 a day with your setup and your strategy and making 8,000 is how much or how big your position size is. So I mean, if you're used to taking a trade with one lot and you're making $200, well, the only thing you have to do to get to 400 or 500 is entering with two lots. The market doesn't change for the two lots. You don't have to change a lot for the two lots. Yeah, you're gonna see different numbers. You have to adjust, adapt, and overcome. And that's the beauty of trading. You get there. It takes some time to go to the next level. I even know traders that say like, look, for me trading with 100k is my max because I can't support higher numbers. And I understand that some people really need more time, and that's all okay. But I know for sure that when the tension is gone, when acceptance of the minus of the drawdown gets normalized for the conscious and subconscious mind, people tend to push it higher. And that's why I made Hertz Trading, and our slogan is push it to the limit always. Like another trader friend of mine, and we'll start on the technical analysis in a few minutes, but another trader, a friend of mine, he's been trading more than a year with a funded account of 10k. He passes both phases, so he gets the master account, and he always blows that up. Like it's the 5th time in a few months he blows the master account. He can't handle the idea that he's gonna get paid out of business. He's still facing his fears. And it's a work point, and my advice to him was, instead of taking another 10k account, push yourself to the next limit already. And then you see the fear in people's eyes, like, no, I first need a payout, I need proof. No, you need progress. You need to push yourself to a place where you're continuously working on yourself, adapting, and you are overcoming your fears. Okay, that for the introduction. Day 1, let's check on the daily chart. We can clearly see, and we said that yesterday, we said we probably see the candle take out here and then drop down and see more bearish movement. I agree, I was wrong there, but like I said, we only interact with the opportunities the market presents us. We try to predict what was gonna happen, and I was correct in where the candle went, but I thought we were gonna see more downside, because on day 1 we have a day 1 fair value gap here that really has my attention. So I don't think it's gonna go there. We all know that price is gonna go there. The question is when and how can we capitalize on that movement. Now if you see on the day chart, day 1 here, we can clearly see that we created an order block with a fair value gap, an imbalance, a buy side imbalance, sell side inefficiency, and we had a candle close here above this bearish candle. So if we check that on the 4 hours, I'm writing down in my journal, clear bullish movement, day 1. If we check out now, we can see that we created a huge inverse fair value gap here. I'm gonna put it back there. And that should draw our attention, because if we're gonna ask ourselves now, where is price going, we can see that we have a break-off structure here. Let me make that a little bigger. We have a bullish break-off structure to the upside here, and we have equal highs, but we can say that and you're gonna see that on lower time frames, we can clearly see that there is a market shift taking place, but it's not on the 4 hours. So price is still trading inside this range from this high here. Let me take this down to this low there. So this is our smart money range, and there's a lot of liquidity above. We said that yesterday. Let me take the money and let us put the money there, because we have equal highs in an order block with fair value gaps on the lower time frames, and we have fair value gaps in this week. So for H4, I'm writing down accumulation since 24 but in bullish move intraday. And what am I trying to do? I am making my mind up. Is it a bullish or a bearish bias? Just as an extra confluence to trade intraday, to scalp, it's always better to trade in line with the trend. The problem, of course, is on the lower time frames, the trend always changes. You know, like in the morning session, we can be bullish. At the end of the morning session, when London goes to lunch, we can have a bearish retrace. And as a swing and day trader, you depend on your bias. As a scalper, I don't agree so much there. Bias is great, but there are many more trades to be taken that have nothing to do with market direction or directional intraday bias. So, but for H4, it seems to me that we have a nice move to the upside. No, let's take the arrow. That could become a possibility, because we have the 4 p.m. meeting. Let's put this on New York again. We have the 4 p.m. meeting, and that can definitely mess up the market structure a bit. So let's take that away again. And you see we have a nice push to the upside, mitigation of this complete bullish candle from yesterday, the wick, where we definitely also gonna see here we're gonna see a lot of money being created or liquidity. You know, look, all these lows are a beautiful price target to aim for. We have the fair value gaps, and what I like always to do is I really like to pull a fib out and just make a small square that we know, okay, this is currently our golden zone. So it's always, for me, those are the A++ setups. Let me take this, the extension to the right away. Okay, and now we see that we have what is happening here. So we have still the new weak opening gap here in the golden box. We have different or multiple fair value gaps, bullish fair value gaps. Does price need to come back to here? Not really, but as we are trading inside this range and we see that we are still on a lower high, then give me a second, I have a phone call. Sí, dime. Sí. Sí. Sí, 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 sí. Sí. Sí, de pintura, y tengo un problema hace años con el otro piso de arriba. Los dueños del piso donde vivo yo lo han declarado, pero sigue el problema de agua. Y ahora el techo, falta que hacen algo entero al techo, perdón, al plafón. Sí, 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 tengo avería de eso también, pero sigo con avería de otras cosas y no la han solucionado. Eso es que te digo. Ha entrado en la dormitorio. En el techo. En el plafón. Vale, perfecto. Mándame un WhatsApp, porfa, es más fácil porque estoy aquí trabajando y te respondo luego. Vale, hasta luego. Okay, back in business. So, just received an important phone call from my insurance. Happened something here in the apartment office. Leak from above, so we have to fix the ceiling. Yeah, the plafond, the ceiling. Okay, back to serious things. So we see we have a lower low, but also a lower high until we would break this smart money range. And like I said, there is two equal highs, so I want to see them taken out, and then we can take a real sweet short or look for a short. And look, if we're gonna see, it's not that if we break above here that we are suddenly bullish, because the movement to this to here down started way up here. So if we would see this in the fractal, as a fractal from the daily, this is okay, thanks. This is still our move as long as we don't break above here on the higher time frames. We're not really bullish, so it can be that we have a retrace, but like I said, bias ain't everything. But okay, let me take that away, because that was an unexpected unfold of drawing. So what is gonna happen here? Is price gonna go up or is price gonna go down during this session? That is what we are looking for and where we wanna interact on. And let me take that away. And let's go H1. Clearly bullish movement. So I'm writing down bullish, bullish, bullish. So the trend is your friend till the end of the trend. That means that in this case it's gonna be better to find a bullish entry and take out our pips. What are we aiming for? Like I always say, we are gonna aim for 10 pips that everybody that in the future is gonna work with me can as fast as possible exit their jobs and become independent. That is my goal, making people independent, that they can rely on themselves. Like the Bible said, give a man a fish and he eats today, teach a man how to fish and he eats forever. So if I can teach people to fish, and I mean not fish in this case, but I mean trade, of course, it's an analogy, then that's just my goal. Then I succeed in what I want to do, and it would make me very happy and grateful if we can get there. So teach a few people how to make money online, and yeah, I'll do that for free with a smile on my face. I really don't need you guys' money for a course, and that's the whole point. I see too much people paying for courses that's really unnecessary. Now we're on the hour time frame. We can also write down, this is yesterday's high. I should put it here. I'm a little bit a perfectionist. This is yesterday's high, and we already took out all the highs, all the positions that were going short are already out of the market. We have to talk about that. Why is that important? Because there are many people that are not gonna get paid, so it's less stress on the market and on the institutions to let all these short positions win. All the stop losses above here are already gone. So for us, the next point of interest, let me take this away, because that fair value gap is already being closed. For us, it can easily be that the market says like lower low, lower high, lower low, lower high, lower low, higher high. That the market says like, look guys, I'm gonna do this here, and we go again to the stops below here before we go up or deeper down. Always take that in account. The market does what it does. It doesn't look to your or my stop loss. It just moves. And us learning how to interact in the most efficient way is what makes the difference in the long term. Now, what do I see in this move that I like? You see we have an A, B. That's what I'm always looking for. So do I think price is gonna drop from here? I don't know, but I can say there was definitely a beautiful fair value gap between this bearish order block and the third candle, and we are still mitigating this. What I've seen happen a lot, and that gave me a good yield last year's, is we have equal lows here and bullish liquidity in the form of buy-side imbalances, also known as fair value gaps on lower time frames. So it easily can be that we see a candle form, and I'm looking for a spot where I can draw this, that this candle here is gonna look like this. Let me get this here. Okay, then we do it like this, that this candle is gonna look more like that, pushing down, and we don't know how deep it's gonna push down. It's gonna depend also on time. This is the hourly candle, so we are waiting for different set of confirmations before we can do anything. And like I said, what is the most important thing in the market? It is time. It's not price, it's not market structure, it is the time where you start to see things repeating over and over and over again. And I did a study, even last year I did a study. It took me 2 months. I was writing down and drawing down in a hard journal like this. I was drawing down every day at different times what the market exactly was doing, how the candles formed, how many pips the move had, if there was news or no news. And you start to see a lot of repetition, things that just happen over and over and over again. And it's really nice to know that if you would do that for you and you're looking for your setup, and you see after 2 months, like, hey, at 9 a.m. I always have a retrace where you normally hit many stops. You have a retrace, then what are you gonna do? You're gonna enter where you have your stop, and you'll have a better positioning, better profit, less risk. And that's what we do in trading: optimization of the process, of the setup. We always try to get better, more perfect, and that has a lot to do with time, not so much with price. Just saying, for the people that will watch this live later, it's very important that you know that time moves the market before price. It's just what I noticed. Don't take my word for it, test it. So this could be a setup, but we have New York coming in the market in 15 minutes. 1 hour later, we will have a high impact news event that I don't expect too much of. It's not like it's gonna move 400 pips, but it can definitely change direction and take out some liquidity. Now we have an internal H1 market structure shift bearish order block plus fair value gap formed, and we write down what the time here, 14:45, price action, order flow traded back into bearish fair value gap. I know it's a lot of writing, but in the long term you're gonna be pleased that you are journaling. And ask any trader, if you don't journal, you're not a real trader. Sad to say, but it's just plain truth. If you don't know your numbers, then you should ask yourself some questions. You see what I mean? We have a nice retrace in the bullish fair value gap, giving a reaction, but it's pushing price down. Remember the candle that I drew? me put it here again. Just I wanna change this here into blue, and so what I said is this is how the candle looks now. The candle can easily go up more, then let me make this longer. The candle can easily go up, come down again, push to the downside, and change of color, and then even push up again. There can happen so much with this candle here that we have to have patience and we don't react too quickly. Look, we have a bullish order block, but no 15-minute fair value gap created. And we still have more sell side liquidity. So my draw on liquidity starts to become what now? Look, we have a fair value gap inside here. We have this fair value gap on the 15 minutes, and let's give that another color slightly just to see the contrast. You see the 15-minute is already taken, so let's take that away to keep the screen a little cleaner. And you see there is no liquidity left in this candle. And we have this imbalance. This imbalance is gone. So we're gonna take that imbalance away. There is still liquidity here inside, but we have to check that on the 5 minutes. But you see, guys, higher high, higher low, higher high. This is still a higher low. So as long as we don't have a clear confirmation, like the price breaking below here, would for me confirm that we are really bearish. But we also have a market structure shift here. This is a change of character. So we have a bearish change of character, but we still had a break of structure here. Now let's pull the fib here and let's see. Look, this would be the 61%. So let's dive into a time frame lower and let's see if this fair value gap, this is our 50% fib equilibrium. Let's make that green like always. And you see this, you see the fib is very close to yesterday's high. And we already were entering the market and we see we have a bearish reaction. But New York isn't really trading yet, so we have to be patient and relax. Let's take this away and we can see we still have and here we'll change the color again. It's a game of coloring. And now we see, let's see how this candle reacts on this fair value gap. If it breaks through, we're going to go after this liquidity for sure. And now what we also want to see is what was our last swing low. And what was the last swing high? This is our latest swing high. And this was our latest swing point low. Actually here, this one too, but that's lower time frame. So we're looking for a point to anchor our fib level that we can say on the higher time frame. We want to know where the golden box is and where we put our Fibonacci, the 50% of the higher time frame swing. And I'm doing all this work because I like to see everything on my chart confirmed. Look, now we have what? We have a golden box here. Let's make it a little darker. And let's now go and check. So we already tapped into the liquidity with the golden box of here. This was the bullish fair value gap. Let's put it back so people see what I mean. And we had a first reaction, but there's still liquidity in this candle, and there's a huge bullish gap below. And it's an imbalance, but it isn't a 5-minute fair value gap. So let's go see where this fair value gap comes from. And now we have a more detailed view on the situation and a better conclusion that the fair value gap here is definitely a good target to aim for. So what are we looking for? A short position from here. Yes, correct. Or we are looking to get in a long position from here. Let me swing that a little to the side now. These are the two positions that I have in mind for the afternoon session. Possible entries. We won't aim so high on TPs. It's unnecessary. Let's keep it simple. Where would we put our stop loss? Because if price goes back in here, there's a lot of money being created or stop losses above here. So what do we want to see? We want to see a retrace like this happening and drop down. If price goes higher than this high, then I want to be out. So my A plus POI, point of interest to enter the market, is above the fair value gap, because many people, and I know that many ICT traders are gonna enter here and put their stop just above the fair value gap. That is how smart money and ICT trades. So what I teach people is, let's wait until the market gives us the opportunity to buy these or sell these stop losses, and we are even gonna look to where do we have the last spot in liquidity on the lowest time frame. And now let's go and find the fair value gap that hasn't been touched. And we see we have a small gap here, so we have to take in account that the market possibly is gonna want to retrace to mitigate that liquidity. There's no more fair value gaps here. There's no 1 minute fair value gaps here. This liquidity is perfectly mitigated. But we have a fair value gap above yesterday's high. And now we go back to the 5 minutes. And the only thing we can do is we made our plan. And we have to stick by it. Now, what also is a very big possibility is that we leave this gap open, that we're gonna leave this gap untouched. That's why I'm saying we're not aiming for these lows with the TP. It's too far, it's unnecessary. You can do that with a runner if you want, but if you trade with me, then my exit will be, my last exit will be below this low. For now, can still change. What I wanted to look in with you is, look, we have a bullish fair value gap on the 5 minutes inside the golden box, and we have another, but that one is already been taken. And look, we have another here, and I'm gonna make this in a slightly different color so we clearly see the difference, and we take this away. And now we see the best position would be, this would be a great demand zone. We see there happened a movement, but this is also a demand zone, so we have to wait and we'll see how the candles get painted. I'm gonna take a quick break of a few minutes. I'll be still around and I'll be back, but nature calls. Okay, back in business. Let's connect this and get back on the mic. So what can we see? Let me write something here in the chat. Welcome to everybody watching now or later. Enjoy my content. Like this. Okay, so we know what we are looking for. We know our setups. The only thing we need now is what? Is time. And let me take this away again and this too. And I'm gonna prepare on the other screen. I'm gonna prepare my accounts. So if there is a position that I can quickly get in, because like I said, I am not a coach, I'm not a trading teacher making money off teaching. I make money trading. Come on, open. Seems there was a little opened several times. So how many do we have open? One. Okay, perfect. Give it a second. Let's put this like this and it will open in a few seconds. And now what can we see here? Oh, you're seeing my desktop. Let's go quickly check the XRP chart like we done yesterday. We have a breakout on the 4 hours out of this channel, and all the liquidity of these fair value gaps is gone. It's already taken, so there's a lot of short positions that have their stop loss above here and above here, so we could easily see a push to the upside. But I also have my theory that we first have to come back down into the golden box below the 50% equilibrium, pick up this liquidity, respect the trend lines on the higher time frame. I like to use trend lines because they get mostly respected on higher time frames, and they're a good guidance of what price wants to do. So I wouldn't be surprised. You see, we have a higher high, a new higher low, a lower high, a lower low, lower high, lower low, and then the breakout. So that's what I'm seeing here, and I know you guys are watching the content for GBPUSD or just to learn how to trade. Look, we're forming, if we would form an M here, we could have an ABC correction that gives us the liquidity to see a breakout and retest to the new high. What also can happen on, and let me draw this in another color, is that we have this one here, and I'll change the color immediately, that we see something like this happen, and that we go look for liquidity up until this breaker here, And even I wouldn't be surprised if we see a $1.20 or $1.40 XRP. Wouldn't be impossible, because it would create a new type of channel. Wait a second, there's somebody at the door. Sí. Yeah. Sí, 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 entra. I'll be back in a second, just give me a minute. The mailman with a package. Casi. ¿Necesitas niño o algo? No hace nada. Habla Adrián. Gracias, capitán. Buen día. Okay, back. And we see some movement on GBP. So let's prepare what needs to be prepared there. For the moment we're doing nothing, we're still waiting. And let's get back here. What was I saying? Why I expect that this could happen is, and I'm gonna change this in yellow, that we see the difference because of this channel forming. I wouldn't be surprised that we see something like this happen to $1.40, and then it's forming a nice strong bull flag that can give us later a push to the upside. And why do I expect this? You see, I draw this pink line already here, and I told yesterday in the live stream that I investigated a lot on the blue line here. Look how convenient that what I'm saying here, this point or this point, that's why I'm saying XRP can easily come back down to 140, 145 somewhere to grab all this liquidity and then push strongly to the upside, because that means we would first see a push to here, and like in this, like this happening. Right, let me take this away. It's gonna be easier to draw again then. That we see push against the double top, make a double top, come down again. That is definitely a possibility too. So, but enough about XRP. Was just checking because I'm a great fan of ISO 2025 22 tokens. And let's dive back into GBPUSD. We see this fair value gap has been tapped on the 5 minutes, but we are still waiting on the kill zone. And taking a trade now could be good because of the liquidity. If we are on the right side of the market, the extra volume of the meeting of the news event could give us a great move, but it can also be that we are on the wrong side of the market and that we pay a stop loss. So what is the best option today? Wait until 15 minutes after the meeting and then take our decision of what we're gonna do. So in 1 hour we know if we're gonna have a possible setup today or not. And it's important to read order flow. You see the market here, New York open, takes out the highs, mitigates the liquidity, starts dropping. But what is actually happening here, if you see this, me personally for now, it doesn't convince me of any direction. We have the market structure shift, agree. But this is more like a new accumulation zone. Are we accumulating below the 50% to see another push to the upside? Or are we accumulating around the 50% to push up and drop down? That's gonna be the big question of the day. And if we're gonna see on the 1 minute, you see what I mean. Look, this is an accumulation zone that we are in now. Okay, let's make that pink for a second. You see, price stays inside this box. And what is happening, we are creating more highs and lows that are gonna attract price to manipulate and then distribute in the other direction, or drop and shoot up again. So what you want to do here, my personal preference is the keyword patience. Let me write this down. Patience. A small whiteboard. Especially got that to write some things for the video. Clean it 100% later. Patience is key. Gonna do this away. Stick up to rules. Stick with rules. Plan and set up. And I write that especially down for myself as a reminder of what made me profitable. Patience. especially patience, because I was really taking 7 trades in a session. Enter, stop loss hit, enter again, stop loss hit, enter again, stop loss hit, knowing for sure where price was gonna go. But it took me a lot of time to stop trading in an accumulation range, and I have my idea of what price is gonna do here now, but the issue is we can't interact with a high lot size, because the price of our stop loss would be too expensive. For people that want to trade smaller size, it's okay. You can enter the market wherever you want, and you just have patience, and when the numbers are blue you just exit the market. Do like heads or tails, or sell, and you wait a few hours, a few days. If price comes back, great. If not, you leave the position open. The thing is, with funded accounts, you have limits, a daily drawdown limit, threshold of the account. And like yesterday, a 5k stop loss, if that gets hit, believe me, you're not feeling happy. And one thing that we learn to control in trading is our emotions. I got used to seeing -2, -3, -4, -5,000, position change direction, go back into the green or in the blue like MetaTrader, seeing nice blue numbers there again, from -5 to +2, +7, and then you're like, yeah, okay, well done. But the real question then is, why in the first place did the position get into drawdown? And then we come to the conclusion that our entry process needs optimization, that we need to figure out how we can get in the position later in a better spot, in a better price, that we have less drawdown, less risk, and if we get in a better position and price goes like we expected in our direction, it means we're quicker in profit, so we're making more money. And that's why for aspiring traders it's really important that you continuously work on yourself. Never stop getting better. Never stop pushing yourself to the limit of perfectionism. And yeah, that sounds like a lot of work, and it is a lot of work, but it's also worth the trial and error, because you learn more about the nature of the market, or the nature of the algorithm, the nature of the institutions that are working on the market, and it makes you a better trader, but also a better person, because it's a real confrontation with your higher self. You have to be so honest towards yourself. Narcissism in the market, there is nobody to blame but yourself. If that makes sense. You push the buttons. So if you have a stop loss hit, you can say, yeah, but they taught me then maybe you learned it wrong, or you practice wrong, or you know what I mean? So you get a constant confrontation with you, with yourself. And if you are not an honest person, really seeking the truth, then you're up for failure. It's something in your mindset that you have to work on, and you have to learn to accept that you can only become a better trader by working on your mind. Because I told this on my TikTok in a lot of videos. Learning technical analysis, I can give you all, or anybody, I can give you a crash course, and in less than 2-3 hours you know how to trade. Really. And I mean market structure, ranges. I can give you a basic mix of all concepts, and after 2-3 hours you're gonna be like, I have my aha moment, I understand. And that's why I'm telling you, why would you buy a course on technical analysis when technical analysis on itself is only 10% of becoming a profitable trader? 90% happens in here. And if you work continuous on your mindset, on your personality, becoming a better person also means you're becoming a better trader. Because if you work on who you are and you analyze yourself, you analyze what happens inside that brain of yours, you'll start to see the ugliest truths about yourself. And I've been there, so I've seen my ugly truths. I was way too greedy. I had a lot of fears of missing out. Oh, I want to be in and pushing oh, I'm scared that I'm gonna miss the trade. I had a lot of fear for leaving money on the table. So in the beginning I was aiming like RR 116, RR 124, because I wanted to make the risk worth the result. And those are all pieces of your personality that influence your trading behavior. And if you don't know those things about yourself, how can you work on them? That's why I'm giving classes too on trading psychology. I do analysis with the people about their mind and confront them with the things that they don't want to hear. I confront traders with the things they cannot accept about themselves, and it's good that you cannot accept them, the things that I'm analyzing or concluding out of an analysis of somebody, because if you can't accept those things, you can change them. And I know it sounds weird, but it's not like, oh, I can't accept that I am like that, so I continue the process. Yeah, you will for a while, and you'll see the same results coming back to you. But once, in a certain moment, you get so tired of losing, and I've been there. Like when I started trading, I really, most people that start in trading, the first few months they get to a 20-30% win rate. So that means every 3-5 positions they take, they have a few nice wins. didn't happen for me. The first year I was trading, I had the worst win rate ever, I think. I think if there was a prize for worst trader in the first year ever, I would have won that easily. I had a loss rate of over 90%. Every time I pushed the button, the market just changed direction, went after my stop, changed again, went into my direction, entered the market again, changed. It was like hell on earth. I was fighting my own personal demons, confronting myself with my behavior. And my biggest luck was when I became an entrepreneur, a businessman in 2008, because I was working like most people. I had a normal job. When I became a salesperson or salesman, then a few years later, because I was really good in sales, I got into a very high-end sales coaching company where they taught me so much about sales, about body language, and I stayed there for several years. I even became a business partner, and I worked with such professionals, and we were selling NLP courses, body language courses. Like, we had an whole arsenal of services, and my luck was that the managing director or the CEO of the company and me, we got very close. He liked my enthusiasm, and that's more than 10 years ago, 15 years ago about. And he saw my potential as a sales, and because I was so motivated and dedicated to the business, he put me in every sales training that we were giving. And our clients weren't companies like the shop on your street corner. No, our clients were IBM, the biggest banks in my country, big IT companies, Konica Minolta of the printers, Agfa, Agfa, those are General Electrics. Those are really big companies. They already have internal sales programs, and still they outsourced to companies like ours. And I had the luck, because I was selling these courses, that my business partner, the CEO, he invited me to take part on every course. So I was sitting for more than a year. I was taking every week several courses, like 2 hours here, 4 hours there, so I learned a lot about psychology, about sales, about mentality, about so many topics actually, that I got, or better said, I stayed in sales for 10 years more, opened my own business, made a nice amount of money there, and I always kept applying the techniques that I learned. And when I started trading years ago, then I had the luck that I was well armed and armored to take this battle up onto myself. I knew what I was getting into, and I knew what I was doing. And the big benefit for me was I knew that I had to be honest with myself from the beginning. And yeah, I do manifestation and techniques too, like I am a good trader, like I keep repeating, okay, and that works, because thinking positively impacts your results and behavior. but going deeper into your own psyche and analyzing why you are doing things the way you do them. That is very confrontational for many people that are not willing to adapt, change, and overcome. And that's the people that will stick to what they do for 40, 50 years, work for a boss, and they cannot or they don't want to accept what they cannot change. And accepting what you cannot change, for one group, it puts them in a position where they're saying like, I cannot change this, so I have to accept it. And there is also the group what we call winners. I cannot accept this. And instead of saying I cannot change it, I have to change it. And it's the warrior awakened inside yourself that wants to succeed. It's the better version of yourself, your higher version of yourself speaking to you, telling like, okay, we're coming to the conclusion that we are wrong, and it's hard to accept this piece of myself, but I really want what I want. And the only way to get there is to adapt, change, and overcome. And those are 3 steps that I like to work with people, the adapt, change, and overcome phase, because in the first lessons, people most of the time are in denial. Like, no, I'm not like that, and do the analysis. Analyze yourself, your words, and your behavior. Write it down on a paper and tell me your final conclusions. And if you're really not like that, then you cannot change. Then you have to accept that you cannot change. But me, I don't take no for an answer. I'm very competitive. If people tell me it can't be done, then be sure that a few weeks later or a few months later, you'll see me knocking at your door with the first solutions. And it might not even work then yet, my first solution. And I'll be bumping my head against the wall. You know the saying, only a mule hits his head 2 times at the same rock? Well, I think that this system teaching people to, if you hit your head 1 time at a rock, don't do it again. Stick to what you know, relax, don't push yourself over your limits. And then you have a workforce of 99% of people outside or out there that will never change. They accept their fate. And I think that is really, really sad. Because there is so much potential in this world just thrown away. And it's because the people have been indoctrinated and learned so many things that limit their thoughts and behavior. And yeah, we're still GBPUSD watching the charts, and the accumulation continues. Probably till the meeting, take out the equalizer lows and reverse. That's what we're aiming for. The higher time frame said we are bullish, but we can clearly see that we have a bearish reversal. We also have a new bullish market structure shift, an internal one here. So yeah, and that was the lesson psychology for today. If anybody hearing me talk in this video would like help with their psychology, and that can be for trading, any other business, personal, just contact me, send me a message, and I'll definitely respond and we'll figure something out. So what do we have? We have a lower low, lower high, lower low, and we have a new higher high here with an internal market structure shift that says like we have a higher low, lower high, higher, and we're really pushing it into a space where we don't know where market is gonna go. But like I said, we can easily see it go up from here again, or just take this zone and reverse further to the downside. That would be a beautiful unicorn setup in this area. So we're gonna wait after what the meeting gives us, but we can also see that the Asian low hasn't been taken yet, and there's a lot of equal lows here and liquidity below the Asian range at 125. So what is possible here? Like I said, I think we might see this happen, and then a further drop. It's a minute soup, so eating some veggies. Just kidding. And I have my coffee too, but it's cold. So this is definitely a possibility, but it's also possible that we're gonna see upside. So I'm not making any conclusions. Because if we first see a push, and let me take this away, if we first would see a push to the downside, a further drop, then we could also see this happen. I see so many possibilities in the market for the moment that I'm not gonna try to break my head over it. I'm just gonna wait, react and interact when possible, and in 20 minutes we have the meeting. So let's just take a short break. I'll leave the charts open so the people that wanna watch can watch again, and when you see the cursor move again, then I'm back. So you can, for the people watching later, you can fast forward so you don't lose too much time just watching an empty chart. It's all good, it's all alright. Let's do this and give me a short break. I'll be back in a minute. This is taken, so we're only looking to this and enjoy the break. Eso es el plafón en la dormitoria, ¿lo ves? Eso es todo del agua. Y ahí por la esquina también hay cosas y por el muro, lo ves también que está mojado. Cuando vení el otro responsable de Mapfred o de, ¿cómo se llama el otro seguro que está responsable? No lo vi aquí, pero creo que adentro del plafón se había mojado todo y se vi luego, pues sí, hay que mirar en un par de días cuando está más seco y es lo que hay, ¿sabes? Should put on some music now. betekent dadelijk? What is happening? Nothing, still an accumulation for the people that hear me from far. Here we are again. Let's see what we can do. Market is still in consolidation, accumulating. So we really have to wait until after the news event. We're forming a double bottom, could indicate we go higher. Fair value gap gets respected a second time, but like I said, time is more important than price here. And I think patience is the key here. Like I wrote down, patience is always the key in trading. An A+ setup. But I have my ideas of what we're gonna see happen. Possible playouts. And that's the beauty if you're experienced and you have years of experience with the charts. You start to know what the market is gonna do. And in this case, it's two big possibilities. There is nobody that can tell you now what the market, the next move is gonna be. We can say what we expect, but for now it's very unclear which direction they're gonna choose. And that's typical. Before a news event, the market creates more liquidity, draws people in taking positions, and then eradicates the idea of many traders like this. And you have to know, you don't want to be liquidity. You want to get liquidity out of the market. And one of the best options there is wait until the opportunity presents itself. Don't imagine too much, don't make too much predictions, and no, you see what the market can do, where it should go, where it could go. And look what I said with the last 5-minute bullish candle that we had. We were going up, but now we're going down. Look how quickly it changes. That's why I call this manipulation. instead of the consolidation is actually for me the manipulation. And I mean that not in the financial way, but that's the range, the trading range, where many people's positions get liquidated because they get drawn in taking positions that aren't opportunities. You see, the highs are taken, there's short-term equal lows, and market is going down now, so jump on the train, put your stop, go short, put your stop above here, and then we see more accumulation or a small move and another move. This isn't just the time to jump in. The 5-minute candle now, the bearish candle is trading into the order block, still respecting the fair value gap. 2 minutes of the 5-minute candle left, so this candle can go wherever it wants to go. It can go up again to people now going short. Sell, 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 sell. Look, let's make the candles a bit bigger so we see better what's happening. As long as that 5-minute fair value gap is respected, I'm neither bullish nor bearish for the moment. Trading inside the golden box, you see price here in the golden box. How far is it gonna go up before it reverses? So many possibilities for now, and it's not an opportune moment to get into the market. The best opportunities give clear setups that move quickly, and you'll know. That's something I learned a few years ago when I just started trading. I was following a trading course from a guy. He's giving something completely different. I don't think even a lot of traders heard of him. Not gonna give the name either, because it's a very expensive course, and I know that not a lot of traders can handle what he's teaching, and it doesn't always work either. It's very complicated. And the thing that I picked up there is, if you are in a position and you are right, you'll know in the first 20 minutes of your position. If in 20 minutes you are not correct and you see that the market is going where you calculated or where you expected it to go, then you had to close your position. You could wait 25 minutes, but if you in 25 minutes weren't in profit, then the position became invalid. And that's not wrong to interact like that with the market, because if you're in an accumulation like this and you're not getting quickly into profits, it's better sometimes to take a small loss, close the screen and just walk away. Go enjoy your day, go have some coffee on the beach, or go to the gym, don't spend more time on the charts, because if you're taking a loss, then you should actually learn to walk away instead of revenge trade. Because that's what happens. Your mindset is like scrambled eggs. It's like, you know, you can trade and you believe you should make the money back. And you're right, you should make the loss back. You should make up for the loss, but not in the same session or even in the same day. And what changed a lot for me was when and it's like a whole while ago, I had a real losing streak, like 2-3 weeks. I couldn't do anything right. I was like, luckily I stayed on break even or close to break even with my accounts, you know, made a few losses, then had one good trade, came back to break even, had a few losses, one good trade, came back to break even, but it wouldn't just work to push me to my profit like normal. And my self-analysis, you know, the work I done on me, told me that it might not be the right time to keep trading. And then I took a few days off. I just said, like, I'm not gonna trade for a few days. And when I came back, it was like fresh mind, new opportunities, no more manipulation that was playing with my head, like, oh, I have to. And I started trading as before, taking the good setups, making money, and that's called progress. And those are hard things for traders to pass. It's that work that you do on you that makes you a better trader. Because once you know technical analysis, the best advice that I can give is learn technical analysis. Once you know how to analyze the charts, keep getting better. You'll keep automatically getting better at it. But stop learning more strategies. Learn 1, 2, 3 strategies that teach you the basics on how to read market structure, order flow, price action, whatever you want to call that. And once you have the hang of it and you have your setup that works, then stop learning. Stop learning about technical analysis and only work on yourself, and you'll see, look, oh, the new scandal. How beautiful. So we have the break to the downside. My position from this morning would have given a beautiful yield. Let's take all this from the chart now, so we get clear view on what's happening. All this liquidity is taken. I'm gonna leave this one. The golden zone is gone, and now we switch to the 1 minute chart and let's see. So it was a heavy candle from the news event. It had more impact than I expected, honestly. 25, 30 pip, something more. Let's see. Yeah, 30 pip move. But what now? What is taken here? How deep did the candle go. Let's put this aside. We are in the 4 p.m. kill zone now, and look what the candle is doing. How do you want to trade a candle like that? That's not trading then it's pure gambling. It's 37 pip drop in 1 minute. That's beautiful if you're on the right side of the market and you're already in from here above. Then you got a nice drop. But let's see what the market wants to do. This one is taken. Replace the mouse. We are mitigating this fair value gap. The equal lows here are all gone. So we are bearish, because this is a bearish confirmation again. We have the market structure shift. We have our break of structure. Let me put that template boss. Okay, we have the break of structure, and now we have to go to a lower time frame. And what are we looking for? Shorts would be best, but from where? Anybody any idea how to short this, what we sometimes call beginning of a V move? We never know how high the price gonna climb from there. So where do you want to go long? How do you want to do that? My advice here is do nothing, be patient, have patience, and we'll figure it out. We have the first step in a higher time frame fair value gap. Let's see from where this came. We're trading here. Let's put this line here, and let's make that a blue one so we know what the line is doing there. You know how many long positions that this candle took out, and with the slippage in this drop, people that had their stops here, they are getting pulled out, dragged down here with the slippage. And with the spread, it's sometimes terrible. If it's in your benefit, it can be beautiful, but if it goes against you, you're really screwed. Like, just to say it plain and honestly. Can be that you have a stop loss of, let's say, 15 pips, and you're presented with a stop loss of 30, 40 pips. With the quick drop, they just drag you down into deeper drawdown. And even if people's accounts, seen that people accounts get closed like that. Now what do we want to see? This fair value gap is almost completely out. Look what I said with this candle. When I said go back in the video if you want, I told that this candle could easily do this. on the daily time frame. Look, what is the candle doing? Don't want to say like that I know, but I know what I'm saying. I know how to trade. What do I expect now? Well, we saw this happen. Price should come back to here somewhere and go down more. Let's put this on the 15 minutes and let's see where we have the breaker. This is a good entry for a short. This for me would be a short entry and aim for this low here. If price decides to come back above, because this was the opening price, if price traces back to the opening, I would definitely go look for a short. But in order of where price is now, my first idea would be like price has to go back up. So why wouldn't we try to capitalize on the price movement that is about to happen? Like this. So what are we looking for now when price drops so fast? I'm looking to go long. And I'm a contrarian, I know. The trend is your friend because the trend shows what it wants to do. Let's take this away. Fair value gap has been taken. If we get a reaction first, we cannot do anything from here because then it will go really quickly, like have one tap, come back, go up, and then drop quickly deeper. But I expect price to go after the next level, next price level, point of interest. I'm telling you, I wouldn't mind getting in here somewhere in the order block or on the breaker here. But like you see, 1 minute we have no fair value gap. And there is a gap here. And this is an old fair value gap inverted now in a order block. So what are you doing, price? Show us your true face. Very possible now. Market structure, shift, retrace, go again after the 50% here. Take out all those shorts and drop, because there's a lot of liquidity here now. And we'll change the color of this. Let's make the purple. Like this. There's a lot of liquidity above that line. Many people that went short here are now doing a victory dance, and the market can show its real true colors. Is this a good place to go long already? I don't know. This is a big possibility too. And I can't even get to draw what I want to draw. That's definitely possible too. If we see that on the 5 minutes, take the liquidity here below. The price is definitely bearish. So can we get in here like this? Yeah, you can, but then you should have your stop at least here above, and I wouldn't advise that. And you could use this level too as an indication of where price wants to go, because you have these fair value gaps here now inverted. So that's what I'm saying. This is the candle, the day candle opening. If price trades again above the day opening, it's a perfect short that is worth the risk. And if we see on the higher time frames, let's take that away. See, we have this move, we have a head, we have a market structure shift here. On the higher time frame we are bearish, so this is definitely a good trade if it is given. So I'm gonna prepare to go short. Be careful here that I don't push the wrong buttons. My stop will be above there. TP, normally I'm not such a fan of a TP, but in this case, let me see, 124.846. I would go for 24,560, 24,560. I'm still more in the idea of taking a long scalp against the trend. Get in, get out, make ourselves a few $1,000. For the people trading lower, a few $100 would be the perfect afternoon session, no? Trading with Uncle Davy is what I'm gonna call the show. Look, if it trades to 225, 268, 268 is the break of structure here on the chart. Oh yeah, I'm watching the other chart on the big screen because I have more charts open there. I have the hour time frame and the 30. Let's open the tablet too, as the more information the better. Let's quickly see. Okay. Even the tablet gives us the same conclusion. And let's see, that's the day opening gap at 221. I agree, what you guys here see on the screen would be a great short, and we have this as inverted fair value gap. Let's take some crap off the chart. This is our higher time frame market structure shift, so if we go up, price should go down again. But I'm still interested in a long scalp. Not suggesting that anybody should follow what I say. Take your own decisions, be responsible. And what time are we looking for now? I'm not gonna trade before 4:30 in the afternoon here. That would be 10:30 for New York, 10:30, 11. Think that's where I'll probably see a position appear on the chart. So we practice patience now, and only if we get an A+++ setup, we take the risk. Let me prepare this on the other screen. New order, stop loss, and the take profit, I'll set that later. So again, where is the 221? I'm checking there, 27. It's okay if we see that. For now, let me quickly go and clean the other chart. Two lines that I want gone. 228, 21, perfect. This one, take it away, and we leave this. Equal lows all taken, and it's still an uptrend. So let's see, to the 50%, fall back here under the 50%. So TP should be 224.88, 224.680. The stop is 25.384, like this. The TP was, what did we say, was here at this level. That's a nice TP. And now what do? Put this on the 3 minutes to see what happens. And we can now see on the chart we start to have the bullish reaction. but we really want to push ourselves to the limit and only sell if price comes above the candle, the day one candle open, because that would be the real new the interesting premium. Like if you take the fib here and you pull the fib against this candle, then you see that the 50% is here. But if you check, now we're already above the 50%. So price should trade back here, and then we would be very bullish if we move back up. But it's worth the trade. Let's put this into position. Okay, let's just erase it. Don't know why my chart does that, but they always make the position bigger than it is. And we have, what do we have here? What didn't we see from the first time? Look, we have this small fair value gap there that actually is at the basis of this complete crazy move down. So just selling here, yeah, we could, because we expect price to come down and go up, but these are the two possibilities here. Look, price does this, comes down here and then goes up, or price just says like, sorry, I'm going up. So because we're not gamblers, we are, but we are wise and educated. We know what to look for and how to play, when to play. Like yesterday, why take a trade when you are not 100% in line with what you believe that should happen? Like this morning, I saw that the time was perfect. I saw that my setup was playing out. I could even see that on my mobile phone while I was having my coffee. And I had something like, okay, click, click, click. I put in, I think in total 20, 30, around 40 lots. The first 10 were stopped way too quick. No, not 30, it was in total, yeah, 30 lots in total, 10, 20, direction 28 lots. My first two positions, then actually 3 positions were not well positioned, so they were closed in a loss, and the other positions, they closed me in almost $600 profit just from your phone. And then people start panicking. I'm like, seen this happen too much. I know where it's gonna go. Just I didn't even, in the latest positions, I didn't even put a stop loss, but I don't advise that. If you trade with your own funds, you can do whatever you want. For funded accounts, it's a big no-no. So take good decisions when you trade. Oh, price is going up. I should enter a position. No, you shouldn't enter a position. You shouldn't do anything right now. Price is going down. Buying now would be crazy. Although it's at a nice discount. Like I said, 430 manipulation moment. Market doing crazy stuff. Even this setup, sometimes it works, sometimes it doesn't. Quickly wicks back into the order block and reverses, takes all the stops. I wouldn't be surprised if we see this happen and wicks in here and then drops. Why? Because we would see the 50% being tapped again. Let's check the fib on the 50%. Oh, that's the wrong one, sorry. Let's check the fib here. This should be the point where it drops. This is our golden box. Probably price isn't even coming back there, doing this and going further down. So, or we interact with what we see happen. You see, it respects these highs for now. Not my setup. Yeah, I've been up since 7 a.m. here in Spain, so it's been a long and heavy day already, and still a lot to do today. Good advice: if you don't feel sharp, don't trade. You know, like if you're not sharp as a samurai sword and you're really in tune with what you're seeing happen and you're not quick, then sometimes it's better to say like, whatever happens, rather don't lose money. I know what I want to see happen there. 222. Let's test these numbers here. Let's fill this in as a pending order. 25 to 22. Then our stop would be worth 25. Have to change that. 25 381. Then we would be playing with a 15 with that's a big stop loss. I can live with that. And now if we would see the candle pattern change, break below here, then It could be an indication of continuation, but we can see this as an internal market structure shift too, that we go higher. So gonna take a quick break, guys. I'm drinking way too much coffee today, so better would be investing in toilet supplies. Oh, this would be a beautiful long position. Really telling you, just a small one like this. Enter here, stop below this small fair value gap, and just let it rush. You know, we would have the entry there in this fair value gap. That would be the mini scalp, and you see this is the 10 pip scalp that I'm talking about. The thing is, you're playing with fire because you have a 10 pip stop for a 15 pip profit. Many people don't like a 1-to-1. I'm one of them. Still in a downtrend, so buying is actually not such a good idea, I told you so. But we have to see a reaction here, so this is a fair value gap too that would serve as a buffer. Going after the stops below this now. If I wasn't recording, then I would even, in line with the trend, I would even dare to short this like this. I tried so many things and I got stopped so many times that in the end I just decided to take less trades and be patient or practice patience and wait only till there's A plus setups being presented. Why do I say this golden zone? This is the last swing high. So yeah, we could enter here. But then we have to be aware that this is our stop loss. See, we have this inverse fair value gap as an indicator, but I'm not so keen on that type of setups. Rather do this, wait until the market shows us something like this, and then enter in this point here for the drop. Second confirmation. This isn't the place where you buy or sell stop losses. That's at swing points, not in the middle of a trading range. I need to get some more coffee. Look, the short position isn't probably what we're gonna look for then. You see, price respected this. I was gone, like I said. I would have dared to even sell this, buy here or sell here, but it's a 50-50 and we think in probability. So if you took a long position here, your stop should have been very, very sharp. You should have been out quickly. What do we see? We have a new fair value gap here. This fair value gap has been taken. This is going to the side for now. We want to see this being tapped and or goes down, or we see it go up. Honestly, for now, probably this would be a good short, but what would we use as a TP? We have to see that clearly. Then our TP would be here. We have the break, so we could get into a short like this, stop above these highs, but we have this fair value gap that created this, so I expect a move from here. So this fair value gap is gone. Can clean that from the charts. I'm looking more into taking a long scalp from here. Let's see on the 3 minutes. Look, if I kept the position from this morning open, would have been 80 pip move. Beautiful days with 30 lots. 30-40 lots, you're speaking on 20,000 a day. 2030, somewhere in between, 24 somewhere, I think. Those are the days. That's what we all should aim for. But only we don't have to do that every day, of course. You know what I mean? If you can have 2-3 days like that in a month where you get 40-50 pips and the rest you're just quietly scalping 10-15 pips, whatever suits your psychology, and you always have one runner, then you're a happy camper. And you see me very patient, very controlled. No FOMO of, oh, I have to get a piece of that pie. That's what changes your complete trading and mindset. I am no longer a victim of my most basic animal responses that the market abuses. Or we get the best type of setups, or we don't trade at all. And is it then a waste of time? No, it isn't, because every day watching the chart, the candles paint, changes the way you see the market, and it makes you a better trader. And this isn't a bad setup, but look, you see all these equal highs here. You know how many stops are already above. If price chooses to go after here and pushes above, all these stops change into buy stops. Let's take a trade just for fun. No? No, not just for fun. What is the level? $24,788. $24,750. $24,750. Look, already tapped into the fair value gap. Let's see. But in confluence with my blue box theory that I'm still testing, needs a little more proof there. I think price is gonna drop here and then reverse. So yeah, we could take a short position from here into this box. Look, would have given us how many pips? Because I put the stop loss into, look, this is a 7 pip move.
Sure, I can help with this. First, please unlock your phone.
Gemini just thought I was speaking to the AI. Does that sometimes. It's a curious little bastard. Look what a beautiful reaction. But we're not convinced. Are we convinced, guys? Or is this more a short position? Still waiting on the reaction of this fair value gap. Take out the highs and then drop deeper. Where do we have the stop here? Let's now use this here. Ooh, that was a nice reaction. No, that's why I'm telling you, I can take so many scalps in a day. If I wasn't streaming, I was scalping, but honestly, I'm distracted. Gonna see how my trading evolves, because scalping shouldn't get in the way of streaming shouldn't get in the way of me trading. That was a nice move. That would have been a $2,600 move. Yeah, most of the time trade 10 lots. Fair value gap gone. Silver bullet setup, price taking out these highs. Trading inside the golden box into this fair value gap. And look, if you're trading here and you're trailing your stop, then once you see the candle return, you just take your profits. You take $2,200 profit here, whatever your lot size gives you. Just take your profit and call it a day. This move is all you need in a day to live like a king. This move is better, I agree, but catching this move with a big lot size, you need a big stop loss, and most people would enter this position with one lot, while they should have the nerves to do it with the same size as they scalp. But that's playing with fire, and you only should risk 1% of your account, blah 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 blah. Let's get back to the former ID where we were working on. 4, 5, 5. This should give us a reaction. Entry will be 285. Reaction on the bearish fair value gap. Are we gonna see more downside? Or is it gonna give us the short in line with the trend? Don't think so, but we already took all the liquidity from this fair value gap out, pushed up perfectly, takes a fair value gap here, and let's see what happens. The game is named Patience. Are we gonna drop deeper? Yeah, boring if you don't take trades on the screen. Who says I'm not trading? It's not financial advice what we can show on YouTube and in TikTok. Otherwise they can put you in prison, and I don't think that's where I should be, in prison. Nah, I like my freedom too much. And we patiently wait. Beautiful, those equal highs just above the 50% equilibrium fib, the golden box, reaction on a fair value gap. So many people going long already. I used to be one of them, but I learned quickly that if you learn to scalp on 10 pips, you find so many opportunities. Get in. Just buy the fair value gap here. When price goes in, you just buy it. And you click in the middle of the fair value gap, you click. Your stop loss immediately goes in break even or in small profit, and you just let it run. Gives you 10, 11, 12 pips. You see the first wick down, you close the trade, done. Pushes up immediately to the next level, first wick down, get out. Take 10, 15, sometimes 17, 18, 20 pips, done for the day. I already took my profit today, so I don't really care. If I get 600 a day in a simple scalp that I didn't even took on my desktop here, on my laptop, on my setup, just think about it. 20 days, 600 bucks, $12,000 a month. And those are trades on my phone. I have other types of numbers that I can show you, but like I said, if you get to 1,000, 2,000 a day, that is really life changing. 1,000 a day equals 20,000 average a month. Let's say that you only trade 1 in 3 days, that would still give you 7,000 a month, 30%. You know, with winners, losers, days not traded, 7,000 a month. Doing that 12 months gets you close to 90,000 in a year. You know how many people in Europe make 90,000 a year? Not even doctors and brain surgeons. Nah. Not even lawyers. Nah. 100K in Europe is still a lot of money. And I'm telling you, you're only scalping 10 pips with a few lots. It's ridiculous amounts of money that can be made in trading. Let's just wait and see. If price gets here, I'll take a short. And we're gonna aim for the next fair value gaps low then. Take out these highs and then let's put a TP here below this is enough, and that level is 24,550. 24,550 and the stop is 25,450. That's a beautiful ID. Let's give those numbers in as a pending order, then we have an exact ID of what the position risk is. Missed the number. Then we're risking almost 3,000 to make close to 8,000. That's okay. That's worth the risk now. And we have all the confluences if this plays out. And our threshold would be here. Let's see this in the lower time frames again. Our threshold would be here. So what do we want to see? We want to see this liquidity being taken and then drop. And as soon as we can, we go and that's something I wanted to talk about too. Many people trade their PNL or their account, while you really should learn to trade the market. And it means when you trade your PNL, it's like, oh, I'm 500 down. If I only can make 500, then I'm back to break even. If the same position gives you 1,000 and you always close too soon, then you're gonna end up losing. Come on, give us the position. We only need one push up to the upside. Take out the liquidity. Show people that we are going. We want to see this now. Look. Now we want to see this happen. That's what we're looking for. And why only here? Because if price doesn't reverse immediately after taking all this liquidity, then we take a small loss and we call it a day. Looks like it's gonna choose to drop without retracing. Drops from F. Let's see. Let's do some magic with the FIB. Just a test. Look. That's what I'm saying. This is where I want to see price come back to. This is the level. If price goes up, I'm definitely selling here. All the confluences of my setup. Come on, show us what you can do, market. Are you gonna drop now? Or are you gonna give us the sweetest entry ever? That would be a confirmation on my blue box theory. If we get that setup. Come on, market, do something crazy. Because today I'm willing to extend my kill zone by 15 minutes if price goes in the direction I believe it should go. Look. Let's say it does this. and we don't even need that TP to get hit. We're only looking on one good reaction on the 25 to 40 level, and this is the 25. Look, we are trading currently this is another break of structure. Come on, decide what you want to do, price. Test the patience of the traders. Let me enjoy a bit. My sunglasses on. I'll promise I won't fall asleep. That's the beauty on tape reading. Every candle gives you more experience. Every 5 minutes that you're reading, I see so many things repeating here where I think like, why didn't I got in there? Why didn't I got in there? Why didn't I get in there? And what you learn psychologically from this is your mind starts saying, because the risk isn't worth the reward. Because your mind is saying like, stick with your good habits because that's what's paying. Because your mind remembers the times that a bad position went good easier than a good position going bad. And there's a lot of positions that can go both ways. So, like I'm saying, I prefer to have the perfect setup or none. And we extend the market for 15 minutes today, 15, maybe 20, 25, depends on where the coming minutes are gonna go. But we want to see the market shoot up quickly and give us a reversal. If it stays in accumulation, then I'm gone probably at 5:30 local time here in the right corner of the screen. If the market now goes up, do we then have a market structure shift? Yes, an internal. Then we have a lower time frame change of character on a higher time frame continuation, what is called a retrace. Not a bad position either to get into a short where we are now. Taken many of those that played out pretty well. Then why don't you? Because I have my goals and I stick to my plan. Looks like it's gonna break to the downside. The second wick takes out a lot of the shorts. It's always the wicks doing the damage and the candles telling the story. Equal lows. A lot of shorts already. Seems like it's gonna be better to call it a day than take unnecessary risks. Yeah, going accumulation. That's what we need to see. Ah, I'm gonna close the live for today, guys, because it doesn't look like it's gonna offer us a good position. Europe is already out of the market, London is already out of the market, and we are entering New York lunchtime. Then we have a 2-3 hour consolidation, and I have other things to do than watch candles paint sideways. So thanks for watching. Or let's wait. We have what? We have 12 minutes. We'll give it 12 minutes, and at the end of the kill zone we decide what we're gonna do. But I think it's better to close for today than make stupid decisions, because I'm looking here at the stop loss of in total 6,000. a little above 6,000 to go short. I know we wouldn't wait until the stop gets hit, but we also wouldn't wait until the TP gets hit. We would get in, take our profits, and call it a day. $4.20 in London. They're closing up in 10-15 minutes, so doesn't look anymore like they have a lot of interest in pushing the buy sell button. Come on. Looks like we're going up, but what is sure here? Ugh. And whatever you think is gonna happen, the market always finds a way to do something completely opposite. Like you think it's going up, then it starts dropping. It starts dropping, and you think like, oh, this is a good place to go short, reverses again. Typical new consolidation range. Like I said, isn't the time to risk everything. Rather take a new setup tomorrow. And like I said, live streaming, it's fun, but it made me decide, like yesterday, to not take a position again. So I have to work on that and fix that I take my scalps when I'm talking to a camera, to a screen.